Hi everyone, and welcome back to Couch on the Couch. Yesterday's autumn budget dropped some fairly big tax changes from the Chancellor, Rachel Reeves, and that was before she had even stood up thanks to the leak by the OBR. But that aside, we're talking about freezes to tax allowances, tax hikes on dividends, interest and rental income, and new hits to holidays and high-end properties. In this video, I'm going to break it down in around about 7 minutes, then show real impacts for low, middle and high income families. So first up, let's look at income tax and thresholds. There are no changes to the tax rates, and that was despite hints a few weeks ago that there would be. So the basic rate stays at 20%, the higher rate stays at 40%, and the additional rate stays at 45%. But the freeze on income tax thresholds rolls on now until 2031. So your personal allowance stands at £12,570. The basic rate band stays at £50,270, and the higher rate band stays at £125,140. So this means that everyone will be hit by fiscal drag. That means that if your income only goes up by inflation, then you will pay more tax without, in effect, getting a pay rise. There's bad news for investors as well. Dividend rates have jumped by 2% from April 2026. So that means now that the basic rate goes from 8.75% to 10.75%. The higher tax rate goes from 33.75% to 35.75%. And the additional rate goes from 39.35% to, believe it or not, 41.35%. The £500 tax-free allowance stays in place. So that's a small crumb of comfort. Savings income gets its own tax rate hike from April 2027. That's up 2% across all tax bands. So the basic rate goes from 20% to 22%. The higher rate goes from 40% to 42%, and the additional rate from 45% to 47%. Property income, as rental income, follows suit, but with new dedicated rates. Again, basic rate up 2% to 22%, higher rate of 42%, additional rate of 47%. From April 2029, the national insurance savings that you make via your salary sacrifice for pension contributions, that will be capped at £2,000 per person annually. So if you're sacrificing more than £2,000, you'll lose some of those tax perks. Changes to capital gains tax had already been announced in last year's budget, but just to remind you that the basic rate for disposals has increased to 18% from next year, the higher rate from 20% to 24%. Business disposal relief rates will climb from 14% to 18% next year. There was a sliver of good news in that fuel duty rates continue to be frozen, and the 5p per litre duty cut has been extended to September next year. So that will probably save you around about £100 between now and then. Drivers of electric vehicles will pay 3p per mile from 2028, and hybrid drivers will pay 1.5p per mile. Air passenger duty on short haul flights increases by £2 per passenger from April next year, which I guess is not too bad, but business class duty increases by around £200 per long haul ticket. In relation to benefits, the key change has been the removal of the 2-child benefit cap, which will help those low-income families who claim universal credit and child tax credits and have more than 2 children. And finally, a new council tax surcharge will apply to high-value properties from April 2028, the so-called mansion tax. Homes in England valued over £2 million will be affected, and the surcharge will start at £2,500 a year for £2 million properties, rising to £7,500 for £5 million properties. So what's the impact of all of these changes? So I'm going to model 3 scenarios based on a family of 2 adults and 2 children. I'll keep it simple with rough estimates of what this means in terms of the costs based on various assumptions. relevant to each situation. So starting with low-income families, which I've assumed have a total household income of below £35,000 a year, it looks like the budget will have minimal impact on you. Benefits like universal credit have been adjusted for inflation, so that softens the fiscal drag that I mentioned earlier. And so I don't think you're going to be any worse off, and you may be slightly better off initially, but again, you'll be affected later on as those freeze in personal allowances start to kick in future years. For middle-income families with household incomes up to £150,000, the budget is more of a mixed bag for you. Income tax, personal allowance and tax band freezes could add anywhere from £300 to £800 a year as your pay increases. You'll pay a bit more tax on interest and any dividends that you receive unless you save through an ISA. Salary sacrifice changes could cost you around £300 a year in lost reliefs by 2029. And with other increases to duties, your total additional tax could be between £500 and £1,200 per year from next year, increasing each year because, again, of the fiscal drag. Higher income families with household income over £150,000 are impacted the most by this budget. No surprise there, because our Chancellor has repeatedly said that those with the broadest shoulders should pay more. You'll be paying more tax on dividends, more tax on interest, and more tax on property income. You'll save a small amount because of the delay in the increase in fuel duty, but you're more likely to be affected by the new mansion tax. So taking all this into account, along with a couple of luxury holidays each year, you could be facing an extra £6,000 to £10,000 per year. So that's the autumn budget of 2025, all wrapped up just in time for Christmas. The bottom line is that pretty much everyone loses with this budget, but middle and higher earners will be especially hit hard. If you're left scratching your head over all of this, get in touch for help and advice. But I hope this has been useful. Please like and subscribe for weekly tax bites, and feel free to comment. See you next time on the couch.